already recording, baby. Yeah, guys, chilling at the hand, doing some. This is actually a setup that I, you know, done a lot of pre-planning for, and then it actually played out very perfectly during the week. And so I'm just gonna show you the screenshot that we had taken. As you can see, the date was on the 19th of January. Today is the 21st, and so this took place actually on the 20th. The intro was triggered on the 20th, which is a Friday. So yeah, before I move any further, guys, I'd like you to hit subscribe, hit like, drop me a comment about what setups you are looking forward to taking throughout the week, and maybe I'll create a video just to break it down according to my perspective, how it is that I see it, and then we can compare notes. But in any case, let's go back. My analysis always starts from it's always a top-down approach, and so I like to make sure that I have a genuine overall understanding of what the market is doing before I delve deeply into doing analysis on smaller time frames, because that sort of defines for me whether or not I should be looking to hold or not. You don't want to find yourself, as I say, where you're standing on a higher time frame bias, and then when it's time to take entries, you find yourself asking, "Where's Agalani? Where's Agalani?" You remember that name? But yeah, why is this not marked out? Okay, I'm just gonna mark this out quickly so that you can see. I'm obviously imagining that you guys have some background regarding SMC, smart money concepts, the general behaviors of the market, and so you've got that refined understanding of structure and that sort of stuff. I put this here actually just to mark out the 50% range, which defines for us a rough idea of where we are looking to see the market go to. Major structure is bullish. It's actually, yeah, major structure is bullish, internal structure is bearish, because we're actually on our way down to mitigate this demand, and so we do expect to see price actually jumping into these ranges to somewhere around either this area or this area before we take price up to the top side. Again, like I like to reiterate in all my videos, we're not prophets, so we're not going to try and anticipate where the market is going, but we'll respond to price as we go along. And so just gonna hop down to your daily time frame. By the way, that reaction that we're experiencing around here is because of the weekly institutional candle that is printed properly on the weekly time frame. And so we're not surprised that we're getting some, we got something of a push to the downside from this area. Here's this institutional candle that pushed price further down, but price held, showing that it still has intent to shoot further deeper into the areas above. And so what we do know is that we're going to either retest this area or break through it to take entries, pushing down in alignment with our bearish sentiment as far as our internal structure is concerned, bringing us towards that demand area down there. Okay, I'm not gonna waste time. I'm just gonna skip to the daily time frame to show you a few things that I saw and highlighted in my analyses. These are points of interest that I'm looking to take entries at, stuff that helps as a sense of confluence to validate whether or not we are looking to go further up or not. And this inducement falls within that weekly candlestick, which means I am more prone to anticipating a break above that weekly institutional candle that I showed you in the weekly time frame. And so because of that, I do see price coming to this area. This is an interesting point of interest because it's right around the area of our internal COC, right, which makes the internal structure somewhat bearish. Sorry. Which made the structure bearish, letting us know that we are coming down to break structure down here, and it eventually did take place. But that's not where I'm trying to show you guys that entry that I took. It's an intraday scenario because it's not one of those buy and hold setups, although we do see this high being taken out, of course. It's just that we've got a convincing institutional candle over there, where we might see a lot of resistance pushing us a bit further down before we hop. We shoot all the way to the top side. Cool. Now it's really interesting for me, which has my sentiment low-key hoping. I don't want to make it seem like I've got the magic wand that decides where the market is going to go. Is this extreme institutional candle? Obviously, you guys can see this IC as well as this one, which shows us that price might be somewhat reactive around these areas. But what's really, 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 really uh, making me anticipate that price might shoot towards the more extreme areas of this supply range is this 4-hour institutional candle. I'm just gonna shoot down to the 4-hour time frame so that you guys see it a lot clearer, and just generally have the sense of why it is I have marked it out. Forget about all that, it's not relevant for now, but yeah. What's going on? Did I remove it? Oh no, it's not changed. It's all the way up here. It's all the way up here. And so this is the extreme extent of our range, and we've got like this perfect institutional candle. We've got a little bit of imbalance playing around within this area, which is somewhat slanting our biases towards seeing price come towards the extreme level. There will be some very healthy and very beautiful price action playing out there, giving us scenarios where we know that we're going to hold for the longest time. Nonetheless, I see collab, guys. This is just crumbs that I'm giving to you guys to sort of show you where my mind is as far as the market is concerned. Now I'm shooting down to the 1 hour time frame because this is actually what I was using to decide on whether or not to take this position to the downside. And it's very important to make sure that you use a proper broker. I want to show you something very interesting. We had marked this out actually on that picture that I've just sent you guys, and it actually turned out to be an inducement. So that's why it's important to watch what price is doing when it comes to your points of interest, because what it did do and what I did notice that when it got to the area, it did react somewhat, but it ended up breaking it, and so we were taking out a break even over here. You see, price came, tapped, pushed back up, and then it shot down again, and so that invalidated our setup. A lot of times we like instances where when price reaches our point of interest, it taps and then it immediately shows a sense of bearish sentiment, your young change of characters on smaller time frames. That gives us more confidence as to whether or not we can hold on to our entries, or whether we should move stops to break even and see whether or not price comes and plays around that area or not. And so in this instance, I was particularly fond of this entry because it was at an extreme area, and so that sort of marks out for us where a point of no return, in a sense. Because it's an extreme area, it means if we go beyond that area, we are changing character, we are violating structure, and so we're okay taking L's at levels like that, because it means we would have taken only one entry, and if it goes wrong, it's -1 hour. Nonetheless, this was our low, previous high, market shot right above it, it broke structure. And then this way it's important to understand structure properly, because a lot of people would have thought that this is a low, but it's actually not. What defines a low for us is that structure was broken. So it's the deepest area we reached before we broke structure, which is this area, right? Our low was created over here. When we came up here, we rejected that area. So we had a young sweep to the upside, and then we pushed back down. And so when we eventually broke to the upside, this was not the area, the deepest area within our range. Our range was over here. And so, of course, as captured within my notes, these were areas that serve as inducement for dumb smart money, and a lot of people who don't understand structure properly would have wanted to take their entries there. 19 January, by the way, low over there, high over there. If price comes to our deepest levels, there's only one possibility, which is upwards. If it goes down, that's change of character, and we're now looking to be bearish within the same market. Nonetheless, I'd like to reiterate this point actually before I move forward. Make sure that you take things step by step, precept by precept, because if you don't know how to mark out your structure properly, you're going to have a lot of point of interests that serve as liquidity for big institutions, because smart money is slowly becoming liquidity for big institutions. As soon as that trading method becomes too popular, too many people are mastering it, it means banks are not able to extract money from those people. But the cool thing is that they know how we're trading, or from our side, it's not that great, but they know how we're trading, and given that, it means they can find ways to manipulate, because they kind of have a sense of what majority of retail is looking at. Nonetheless, given that I like it when my entries are on the 5 minute time frame, and so what I did is that I shut down to the 5 minute time frame, um, and right at the 5 minute time frame. Now I want you to be very, very intent in terms of establishing a clear flow, a clear story as to where it is you expect price, or where you are seeing price going. And this now taps into the conversation of supply and demand, because that's essentially how life kind of works. Supply is always interacting with demand to make sure that the, the prices that are being paid for anything, quite literally, that is being sold is always at an optimal level, such that everyone can be catered for, and at the same time, we're not selling our product too cheap. And so when you do your linear programming, like matrix stuff, I don't remember much of that much. But when you do your linear programming, you realize that there are certain optimal prices where your variable costs and the coming together of your fixed costs, as well as all these other factors, come together to make sure that when you price your product at a particular point, it's optimal. You understand? So long, intricate, very deep discussion, but we dive very deeply into it when you get to university. Nonetheless, you don't need to know that. You just need to have a background idea to figure out why price moves the way it does. It's always testing out price. You understand? And so right here is that 5 minute order block, and I like to call these institutional candles because it shows it's areas where you can clearly see that institutions got involved. Let's go and see candle. Right, I don't know why it's not showing, but when you go to your 1 hour time frame, you'll realize that that same institutional candle is overlapped by out of here's our institutional candle, which served as our point of interest. We came in there, tapped, and we were out. Price is playing out very well, and so my take profits are also defined on the same sentiment, because when we left this area, we interacted, or rather drew our strength from a demand area that is, you know, captured within a 5 minute order time frame. And so my take profits are also anticipated to be around your 5 minutes 5 minute time frame. And so around this area, there's another institutional candle at the 5 minute time frame, on the 5 minute time frame, and I'm going to take my profits right at that area. Right? I'm gonna take 80% of my profits off the table, because I want to let the rest of it run. Currently, our internal structure is bullish, and so we're trying to head up into those deeper supply areas, our premium ranges, before we take price a lot further down. And so yeah, that's the setup that I had. Played out beautifully. One of the few setups that actually played out as well as I anticipated it. I mean, if you saw it, you saw it. And you couldn't have missed it. If you didn't see it, forget about it. Yo, Talabidi is having me. I'm so tired. Nonetheless, guys, thank you so much for tuning in. This is of course in hindsight showing you the sort of analysis that we had done to take this position, and so hindsight is always 2020, but it's beautiful to actually have instances where the journey was documented prior, and so I can show you proper proof that this happened. The screenshot was taken um, on a specific date before price even got to that area, and so when we did get to that area, it was game over. We were ready to execute, and confidently so. Like I told you, this is an extreme range, and so taking entries at extreme uh, entry areas is one of the most beautiful things that you can ever do, because it maximizes your ranges risk reward. If you're able to get those entries properly, your range is maximized, because when you're taking an entry from here and you take profit around here, your risk reward is not as maximized as it could be. But when you're taking an entry from like the extreme area of your range, then you know what you're shooting all the way to the upside. And so we do expect this to be taken out, but you know how price behaves. It might want to wrestle with it before it actually breaks it, and you don't want to stick around to see it draw down with our cash. So yeah, thank you so much for sticking around. This was a very long video, but I tried to be as detailed as possible. If you guys still don't understand SMC and what it is that I look for, the sort of trading styles that I use when approaching the charts, drop me a comment. Drop me a comment down below. Thank you, Siri. Letting me know what it is that you need clarity on. Otherwise, very soon I'll be creating a playlist that breaks down all the concepts that are taken into consideration in doing analysis from the SMC point of view, and then it'll be able to take you literally from beginners to advanced. And then maybe we'll consider, you know, having something of a course where when you buy the course, you get to have one-on-one sessions with me where I discuss trade setups before they happen. I drop them for you guys, share them exclusively, and then also drop signals for all the entries that I am taking. You see what I'm saying? Because a lot of times you find that this might be a point of interest that is marked out, but we have to observe what price does when it gets to this area to decide whether or not. And so I typically don't like it when price does a sideways, it consolidates, which suggests to me that it's gaining strength to come and smash through this area. I like it when price comes, taps, and buys, which is essentially what we saw here. Understand, we had that regular zigzag behavior, and then we had the proper change of character. A confirmed entry would have been right within this area, but we weren't trying to play that game. It was a 5-minute order block. It was extreme, and it was the safest area to take the entry. So yeah, like and subscribe. Looking forward to seeing you guys in the next video.
Hit like, comment, subscribe, and share.
Yeah, share the video. Tell your friends what's up. Out.